Good morning, Steve Free in Chicago with the morning grain comments. Well, we've got beans down about 5 cents, corn down 2, wheat's anywhere from 8 to 10 cents lower. Stocks are mixed, while the dollar's a little bit higher. Crude's lower, and the metals and commodities are mixed to lower. Yesterday, early calls were higher because of dry Argentina weather. Down there, it looks like there might be some showers there next week. But private estimates of their corn and soybean crop is coming down, and we'll see how the USDA handles that this week with their March U.S. and world supply and demand update. I think beans are lower because China came out in their Congress, and their estimate of economic growth was pretty modest and showing even a bigger increase in military spending. And so that has some of the markets concerned about their import demand. We also, in the corn market, continues to find resistance after the USDA's outlook numbers for 23-24 was bearish. Still not seeing a shift of corn demand to U.S. exports, despite Brazil being out of the market and Argentina crops smaller, and really uncertainty as far as the Black Sea exports and Ukraine exports are concerned. We did note near the recent lows that ethanol margins improved domestically, and so did production. So in nearby corn, we're probably in 620, 660 range with 640, no man's land, and it's hard to define whether you should buy or sell it without any more demand or, in fact, weather information about U.S. 2023 crops. Wheat's down. I think market had corrected an oversold situation with managed funds almost record short Chicago wheat, but cheap Russian prices continues to offer resistance to the marketplace. It's kind of early to be worried about Australia and Canada crop, but Southern Plains should remain dry, and that's something that down the road we may focus on if we're going to find support at nearby wheat in Chicago at 7, and nearby Kansas City wheat support at $8. Outside markets, again, trying to figure out the Fed action, whether they're going to raise rates. Will it be a hard landing in the economy because of the recession, or soft landing because of super flow unemployment data that continues to think workers are working, and that still wages are going up, which could be inflationary. So kind of a mixed bag, waiting for the USDA report this week, and just see if what kind of weather we see down the road, especially in the U.S. and later Canada and maybe Australia. We'll be watching closely the rains in central Brazil if it slows bean harvest there, and also we'll be watching closely improved weather in Europe with more shower activity forecasted.